Oh, it's Bruce Youngblood at Pension Solutions Canada. And the auto companies in Canada offer pension options. Of course, you can take the company pension. Uh, you're also offered a commuted value, which is, as one guy said, just take the cash. So there you go, take the cash. Um, the third option is that you can take that cash, move it over to a financial institution, a Canadian insurance company, and take a copycat annuity. I think that term is becoming well known. A copycat annuity or a copycat pension is where you draw the same pension, you just take it from a, let's say, Sun Life. So, additionally, and very interestingly, at Ford, you're allowed to choose a delayed pension. So you leave at the end of December, and rather than start your pension in January, you say, no, wait, I'll wait. And of course, what that does, and watch the quote, look at the numbers, run them or get us to run them for you. You'll find that it starts higher later. CPP and old age security are the same thing. Start them later, they start higher. So where does it cross over? Typically, these things take, well, let's say 10 years to cross over. In other words, where you'll have received as much money, either going either route. And then beyond that, you're receiving more. The real issue is that we're living forever. You know, you can live into your 80s. So in your 50s or 60s, you can get a part-time job. You can get another job. You can find income, not in your 80s. So let's look long term. As a financial planner, I want to look long term into your 70s and 80s and give you extra income then when you don't want to work. Okay. So I started talking about delayed annuity, which is offered by Ford, not GM Cami, and we are still awaiting a ruling to see whether we can move that to a Canadian insurance company. So keep your eye on this channel, pensionsolutionscanada.com. When that happens, we'll post it. Anyway, literally, somebody in Michigan is pondering, can a Canadian insurance company offer a delayed pension on the Ford contract, on the Ford pension? Um, automotive pensions, the automotive industry, where's it going? Where's the automotive industry going to be in the next 20 years? Where's it going to be for your 80th birthday? Um, the only question I would ask you to, or suggest you ask yourself, is would you rather draw a pension from a foreign auto company or from a Canadian insurance company? You answer. Um, I mentioned Copycat, and I think it's becoming better known, but how does that work? Well, first of all, a Copycat pension is where you draw your pension the same to the cent CRA mandate that this must be identical to the pension offered by your company. So you just move that to let's pick on Canada Life. That's one of the insurance companies. So you draw your pension from Canada Life. We set that up for you. We're brokers. We go to them all and recommend the best offer, essentially. Anyway, in a nutshell, a copycat pension is where you take the same pension as your company, but draw it from a Canadian insurance company. Additionally, the Canadian insurance company may not need 100% of the commuted value, and they will refund you taxable cash. So, for example, if your company comes out with your pension statement and it says that your commuted value is $750,000, we go to the Canadian insurance company and they come back and say, yeah, we can pay that pension. We'll take it over and pay it forever, identical as CRA mandate. And there's an extra 25 or $50,000 here for you. So that comes back as taxable cash. Of course, if you have RSP room, that's where to hide it. It's where to put it. Some companies allow direct transfer to the RSP. Others say, no, no, you have to take the cash. We're going to withhold the tax. And then you and I run around the back door, deposit money into the RSP. And next time you file your income tax return, you get the money back. So it's a wash. All right. So that's a copycat annuity. As I say, outside of the auto industry, sometimes commuted values are not allowed. And of course, beyond certain ages, like OMERS is 55, teachers are 50, cops, I think, are 50 years after which you cannot take the commuted value. So a pension that offers a commuted value, that's where we're targeting to find out or to move it to a copycat annuity. Bond yields. Where are bond yields going? I tend to talk about the Government of Canada 10-year bond yield, which you can look up, just Dr. Google 10-year. Look at the history. Volatility. I think we as consumers are more familiar, and the radio publicizes it. They're more familiar with mortgage rates. So you bought a house today. Oh, wonderful. The rates are through the roof. And you lament that, gee, I should have locked my mortgage in 2 years ago. Well, guess what? We are takers of interest rates. You and I don't set them. You and I set, or you do, when you're going to retire, but you don't set the interest rates. So, unfortunately, the golden age of commuted values was mid 2020 when bond yield on the 10-year went down to 0.5%. One half. Now it's hovering around 3%. Was a little higher. Long-term average is 4.3. Although, what's the long-term average? Well, it depends on how far back you go. So, anyway, secondly, interest rates are expected to rise. Both the Government Bank of Canada and the Fed in the U.S. are expected to continue to raise rates another couple of times anyway. So I would expect bond yields to go up. I'm not an expert, but that's a prediction. So why do we care about bond yields? Well, it's the teeter-totter. Let's see if I can illustrate it. Let's see. Teeter-totter. So bond yields up, commuted value down. Right? Bond yields go up, commuted value goes down. Talk to somebody who retired 2 years ago, see what their quote was. Or maybe you have a quote of your own from 2 years ago. There's a difference. I've heard as much as 300,000, 25% drop. Nonetheless, that does not impede the copycat because your company actuary looks at the pension to be paid out and says, oh, we better set aside 750,000 for this person. And then we roll it or move it to get quotes from the insurance companies. And their actuary looks at it and says, I think we can do this for 700,000. Okay. So it's the copycat is still very much available. Where are we going? What if you take your pension or your copycat pension, but you want to leave money to your kids? As you know, the pension or copycat dies with you, actually dies with your spouse. So after what we call the second death, you're done. What about the kids? Well, let's look at a life insurance policy. You want to leave the kids each $100,000. You've got 3 kids. What's 300,000 of life worth? Then whether you die in 2 years or in 22 years, your kids are going to get the money. Another idea is incorporate. So let's say you're a skilled tradesman or you have a profession. You're going to retire. You want to take the commuted value, or maybe you want to take the delayed pension. Anyway, why not incorporate? Let's say, for example, you're an electrician. So you stop working at the plant in December. You have a contract lined up. Well, don't get paid personally. Get the corporation to be paid. So you sign up as ABC Electrical Limited, Incorporated, whatever, and the client pays the corporation. You don't have to take money out of the corporation. Let it sit there. That way you can take the commuted value, for example, or the cash surplus on a copycat and not draw income, which would be heavily taxed. So there's an idea. Finally, I made my 10 minutes. Finally, timing. When should you retire? We're working on one now. It's November. If we can delay that check till January, it's going to come in and be very little taxed. If it comes in December, it's on top of salary, it's on top of severance, da 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 da. So timing is important. Talk to us about that. That's it for me. I invite you to go to pensionsolutionscanada.com, pensionsolutionscanada.com. You'll find an email address there if you wish it, and have a look at some of the other videos that we've done. But importantly, there's a pop-up. Book a free 15-minute Zoom call with me. We'll talk about your situation, what the reality is being you, and, make some recommendations. Okay. PensionSolutionsCanada.com. I'm Bruce Youngblood, certified financial planner, Canadian investment manager, as you can see. Thanks for watching.